Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking this evening. Stock market slide in the last hour. The sensex loses 230 points. The nifty falls over 60. The rupee weakens by more than 30 paise against the dollar.
To me, India is a massive growth market. In fact, again, coming out of this pandemic, India as a growth market has really been reshaped.
Microsoft CEO Satya Nadella is very bullish on China, and India calls India a massive growth market. Remains non-committal when asked about more layoffs at Microsoft, but he is optimistic about the tech labor market, terming it resilient. The Supreme Court expresses concern that the Future Group was trying to scuttle arbitration proceedings in its dispute with Amazon. With the Future Group facing insolvency proceedings, Amazon is now seeking monetary compensation for its investment in Future coupons. Market regulator SEBI floats a consultation paper to tighten the rules for share buyback by companies, proposes to gradually cut the maximum limit from 15% to 5% and reduce the time limit for completion from 6 months to 22 days. SEBI is framing rules to govern influencers who provide financial advice on social media. A senior SEBI official confirms that the market regulator is working on guidelines. There were 415 instances of violations by influencers in finance and crypto-related content in FY22. Government panel recommends stricter rules to crack down on unethical marketing practices in the pharma industry, proposes penal provisions including the termination of license of drug makers, hospitals, diagnostic labs, doctors and marketing representatives. The report is likely to be submitted to lawmakers in a month. Meta appoints Sandhya Devanathan as its India head. Weeks after the resignation of Ajit Mohan, Devanathan, in her current capacity, has been heading the company's gaming vertical in the Asia-Pacific region. She will take charge as the India head from the 1st of January 2023.
Sam tweeted, "At some point I might have more to say about a particular sparring partner, so to speak, but you know, glass houses. So for now, all I say is, well played, you won." Can you respond to that?
I think only a psychopath can write that tweet.
The CEO of the world's largest crypto exchange, Binance, calls the founder of bankrupt FTX a psychopath. Sam Bankman-Fried had hinted that Binance could be behind the collapse of FTX and also called on those living in glass houses not to throw stones at others. Republicans win back control of the House of Representatives in what was an unimpressive midterm performance. The Republican Party nominated Kevin McCarthy as Speaker. He's likely to succeed Nancy Pelosi. Well, let's start with the action on the Lal Street. The stock market sliding in the last hour of trade, ending in the red. The Sensex lost about 230 points this afternoon, while the Nifty closed over 60 points lower. The Nifty Bank and the mid-cap index ended in the red as well. That was the stock market picture for you. In the currency market, the rupee weakened by more than 30 paise against the dollar today. 81.65 is where it closed. The big newsmaker this evening, Microsoft CEO Satya Nadella, remains very bullish on China and India. Speaking exclusively to CNBC, Nadella called India, and I quote, a massive growth market. When asked about any more potential layoffs at Microsoft, Nadella remained non-committal, but he was optimistic about the labor market across tech companies. He believes that the market will remain resilient. Take a look.
LinkedIn sort of has the following data point, right, which is that there are more jobs that are software engineering jobs outside the tech industry than in the tech industry. So to some degree, I would say the labor markets are much more resilient. There's not an auto company that doesn't need software engineers. There's not an energy company that doesn't need software engineers. There's not a retailer or a bank that doesn't need software engineers. So I would imagine, to the degree to which there's oversupply in one, there will be more even distribution. Right? And it also points, I think, to your fundamental point that, like, no industry is immune from macroeconomic issues, right? So everyone has to manage their costs and demand properly. To me, India is a massive growth market. In fact, again, coming out of this pandemic, India as a growth market has really been reshaped, because if I think about historically, Microsoft's presence in India was about mostly multinational companies operating in India. But now, it's completely changed. It's reversed, where it's companies who are innovating in India, whether it's the big, large conglomerates or the new startups, all using AI, cloud technology to be able to innovate and create new services that are obviously popular in India and elsewhere.
Well, you can catch the full interview with Satya Nadella at 7 p.m. right here on CNBC-TV18. Market regulator SEBI has proposed to revamp the entire share buyback process in a consultation paper. SEBI has proposed changes around the maximum limit, the quantum, as well as the time taken to complete buybacks. Yash is standing by with the details. Yash, take us through the three proposals and what this means.
Well, correct, Shireen. So, of course, a SEBI-appointed committee has essentially proposed amendments from top to bottom when it comes to the entire buyback process. I'll first speak about the first part of buyback procedure, that is essentially through open market buyback. Here, speaking on the maximum limit, market regulator SEBI's appointed committee has said that the maximum limit for open offer can be reduced to 10% from April 2023 and 5% from April 2024. The current limit as of now for the buyback tendering is about 15% of paid up capital or free cash reserves that the company has. The reason is simple, that is to avoid the entire order from one shareholder getting matched by a single another shareholder and other shareholders of the company getting deprived to participate in that buyback. The second point is time period. The time limit has been proposed to be reduced to 66 days from April 2023 and 22 days from April 2024. This is the time period from the start of the buyback to the end of the buyback. Do remember that the current time period is about 6 months. This is being done to essentially avoid any sort of artificial demand being created for the shares of a particular company, since it's an extended time period that currently exists. Minimum amount to be utilized. SEBI proposed, the committee has proposed that 75% of the amount earmarked for a buyback needs to be utilized within half of the duration period. Currently, this is only 50% mandatory. The reason is, of course, that it will prevent companies from announcing a buyback and eventually not going for it. Where there is intent, there this condition will really come into play. Eligibility: open market buybacks via stock exchanges should only be available to companies whose shares are frequently traded. There are various amendments made on essentially the other route of the buyback as well, which is the tender route. Of course, we'll be talking about those as well and discussing them.
All right, Yash, many thanks for joining us. That's the latest as far as the proposed buyback rules are concerned. But it's not just buyback. SEBI is also framing rules for social media influencers who are doling out financial advice. Archana Solanki is standing by with more. Archana, take us through what SEBI is looking to do and why are they looking at bringing in regulations for financial influencers?
Thank you, Shireen. Now, how many times do you open your Twitter, Facebook or Instagram account and get unsolicited stock market advice? Now, some person on your mobile phone screen is using simple language, breaking down the difficult market jargon and telling you where to put your hard-earned money in the stock market. I'm sure the answer is yes. Now, the big update is that market regulator SEBI is working on framing guidelines to govern these influencers. Now, this comes after market regulator witnessed an exponential rise in the number of various unregistered investment advisors giving these stock market tips online. And these tips were given on Telegram, Facebook, YouTube, WhatsApp, Instagram. Now, you may ask, why are these guidelines needed? The answer is very simple. It's because there's a lot of ambiguity over these influencers' credibility, their license and their qualification. Now, according to reports, the impact of their advice has been detrimental at times, especially in some recent startup listings. People have lost their precious money. Moreover, there have been instances of influencers being paid by these companies to endorse their stocks without any disclaimers. Now, for our viewers, it's very important to understand that SEBI's rules require financial advisors to register themselves or issue disclaimers. And there are about 1,300 registered investment advisors in India. Now, data from the Advertising Standard Council of India shows that in FY22, there were 415 instances of violations by influencers and celebrities in finance and cryptocurrency related content. Now, these statistics and recent trends have once again brought the spotlight on financial influencers and why regulation is need of the hour. Back to you.
Archana, appreciate you joining us. As Archana was pointing out, this is something that the market regulator is looking at, and perhaps we will soon see rules being framed by SEBI. Now, other headlines that we are tracking this evening: the Supreme Court has expressed concern that the Future Group was trying to scuttle arbitration proceedings against it in its dispute with Amazon. With the Future Group facing insolvency proceedings, Amazon is now seeking monetary compensation for its investment in Future coupons. Paytm's parent company 197 Communication down 10% after SoftBank sold shares worth $215 million via a block deal. Sources tell CNBC-TV18 that the Japanese conglomerate sold 25% of its stake in the e-payment platform. Hedge funds including Millennium Capital, Seganti, Gisalo and Norway's central bank bought majority of the shares. Meta has appointed Sandhya Devanathan as its India head weeks after the departure of Abhijit Bose. Currently, Devanathan is heading the company's gaming vertical in the Asia-Pacific region. She will transition into a new role as the Meta India head from the 1st of January 2023. Devanathan has helped build Meta's business in Singapore and Vietnam as well. She's worked with Standard Chartered Bank and Citi in the past. On to a CNBC-TV18 exclusive. We learn from sources the government panel on pharma marketing practices will submit its report within a month. Now, the new regulations, which will be called the Uniform Code of Pharmaceutical Marketing Practices, will have strict rules to stop alleged unethical marketing practices by pharma companies. Timsy standing by with the details. Timsy, when do we expect this report to be submitted? And more importantly, when will the rules be put together?
Well, to ensure ethical pharma marketing practices are strictly followed by hospitals, doctors, pharma companies, path labs and other medical practitioners, the 5-member-led panel under Dr. V.K. Paul is likely to submit its final report within a month. Sources have told CNBC-TV18 that the panel on Uniform Code of Pharma Marketing Practices is likely to propose a new regulation to ensure that ethical marketing practices are bound legally and they should be fixing responsibilities. The new proposed regulation is also likely to have penal provisions and could also, in certain specific cases, allow for termination of license. Under the proposed regulation, it will be duty of pharma companies, medical practitioners to strictly follow ethical marketing practices and not indulge in bribery and freebies to promote sales. The panel is of a view that strict regulations are necessary to ensure and to stop unethical marketing practices as the current voluntary system is violated and none of the stakeholders are following the ethics prescribed under the Indian Medical Council Act of 1956. So let's see how soon the report is out and what does it finally have to say on the marketing norms. But yes, as of now, they're on the cards and they're likely to be very strict. Back to you.
Timsy, many thanks for joining us. We will head into a break, but when we return, we take stock of the production-linked incentive scheme for mobile phone manufacturers 2 years after it was rolled out. That coming up when we return. Launched with much fanfare 2 years ago, the production-linked incentive scheme for mobile manufacturers hasn't taken off as was expected. So far, Samsung is the only company to have been eligible for incentives for the last 2 fiscals. However, the incentives are yet to be disbursed. As per a presentation by the Chief Economic Advisor Anantha Nageshwaran, PLI schemes across sectors, including mobile phone manufacturing, are yet to pick up. The presentation highlights that the government was expecting an investment of over 11,000 crores, but so far, nearly 4,300 crores have been invested. So to understand where things currently stand and what's holding back investments, to take the discussion forward, I'm now joined by Hari Om Rai, the chairman and MD of Lava International, and Pankaj Mohendru, the chairman at the India Cellular in Electronics Association. Gentlemen, appreciate you joining us here on the program. Mr. Rai, let me start by asking you, you are one of the applicants of the PLI scheme, in fact, one of the winners of the PLI scheme as well. Can you take us through where things currently stand as far as your own production targets are concerned? You haven't been able to meet the criteria that was set by the government for the PLI scheme. What seems to be the issue?
No, actually, it's about, as we began the last year, and last year the semiconductor shortage was there, and Lava is the only company in the world to have, design to manufacturing from India. And since we were the only company, we buy the chips directly from India. And as we buy the chip directly, we were last in the queue when the chips were to be supplied. So that's the only reason why we have not been able to fulfill the targets last year. And, a lot of other schemes are coming in to support, build the Indian champions. And I think it's just a matter of time that we'll surpass all the targets, etc. The very strategic impact of this PLI scheme, we'll discuss that, once we have that question.
Right. Yes, the PLI schemes are meant to boost domestic manufacturing. But I want to understand from you, you spoke about the chip shortages being one of the constraints that came in the way of you meeting your target for last year. Are you on course to meet the targets this year? Have you been able to increase production, since clearly the chip shortage is no longer as much of a constraint? And you said that you get your chips from India. Where do you source chips from India from?
No, we source our chips from Taiwan and also from Korea and other countries, and and the shortage has been there for very long. And as in this year also, till quite some time back, the shortages have been there. But now the situation has improved, and our business is improving now, and we hope to do this to complete the targets this year.
You're hoping to complete the targets this year, but can you give us some numbers? What is the current production? Because when we last spoke, you had talked about doubling production capacity. How much have you invested in adding capacity? What is the current production for Lava?
No, so let's first of all, I think you need to understand that first of all, the PLI scheme has never been for the domestic manufacturing. PLI scheme has come as a boost to ensure that we start exporting to the world. Actually, that's the reason why PLI came, because all of the domestic requirement of India is getting manufactured in India already. So that's the reason why PLI has come, and therefore and our export business, we are looking at various other levers to start exporting, and being globally competitive is one of the levers to start exporting. And a lot of other actions are being done by us, which are in the way. And therefore, we believe that this year we will grow a lot. For example, from last year, our growth rate in the last quarter has been almost, I would say, 60% up. We were 60% up than the last year. In the last quarter. So that way we are growing, and in terms of investments, we've already invested what was the required investment. So that investment side is not a problem, but being global competition, demand, etc., are the issues we are sort of trying to find out solutions, and we believe that we'll meet the targets this year.
Okay, let me bring Mr. Mahendra into the conversation as well. Mr. Mahendra, good to have you back on the program, and we just wanted to understand where things currently stand as far as the PLI scheme for mobile manufacturers are concerned. Samsung is, according to reports, the only eligible player to get the incentives for both years. That's 20 as well as 21. And I am given to understand that Dixon, Paget Electronics, that's the 100% subsidiary of Dixon, has been cleared for receiving the incentives for FY22. Now, can you explain to me where things currently stand? We're still unsure if any actual incentive has been disbursed by the government. Can you clarify that for us?
Shirin, just remember that this is now 5 years. You choose 5 years out of 6 years. So it was a kind of a rollover because of COVID. So Samsung has chosen to be in the first year also, or everyone else has chosen to be in the next 5 years. So this year was the first year. So you are, the 2021 is only a year for one company, and 21-22 onwards is the year for the other companies. And every company, you see the 5 global companies, one out of them is going to start this year, which is 22-23. They were not in 21-22. All the other companies except one have met the targets, and they've crossed the targets. Out of the domestic companies, there were very serious challenges. Paget has met the target in the first year which is the first year out of the next 5 years. And the others, there was an unprecedented situation of, supply issues, which the Lava chairman has just spoken about. This year is looking very, very good. And I think the scheme has stabilized.
Okay.
I think this is a it's a tremendous success, the PLI scheme. It is getting reflected in how exports are shaping up. Last year we exported 45,000 crores, and this year I think we should end up with 75,000 crores of exports. So can you believe it that if you turn the clock back in 2014, could you imagine that India could be exporting? We were importing 80% of our domestic requirement. So it's everything is turned on its head. It's a tremendous success. Of course, there are huge challenges at the moment. We have to
Okay,
build
Mr.
the
Mahindu,
Indian
just one
champion
second.
company.
No, I'm just trying to understand. I'm just trying to understand, where the gap lies, because you're saying that it is a tremendous success, and you also pointed out that there were changes because an extension was granted on the back of industry seeking an extension, saying that because of the pandemic they couldn't meet the targets, and so the government gave a further extension. Now, it's complicated for people who are watching. There's now a different time periods that different companies are looking at. So you said that this year, global companies, 5 global companies have met the targets, but domestic companies are yet to meet the targets.
No, you see, 21, 22, 2 out of the 5 domestic companies met the target, and payments have already been made to Paget, which is a Dixon subsidiary. That is the first PLI payment out of all the PLI payments which have been made. Out of the 5 global companies, one for them, the first year is 22, 23. So out of the other, all except one have met the targets and have crossed the targets.
Okay. So, and can you confirm whether Samsung has also been paid the incentives by the government? You confirm that the Dixon subsidiary Paget has been given the incentives, but has Samsung also been given the incentives? Because there were reports suggesting that some clarifications have been sought by the government.
Samsung has not got the payment yet, as far as we know.
Okay. So you're both saying that you believe from this year onwards things are likely to pick up. Can you give me a sense of whether the investment gap that was reflected in the data that the chief economic advisor had put out, where he was summarizing what has happened as far as the PLI schemes are concerned, are we likely to bridge that investment gap? Mr. Mahindu, let me start by asking you, what are you hearing from your members?
Shirin, there is the investment of the global companies. They've almost all been made already. Investments which had to be made till 25, 26, they have already been made. So that's done. In the Indian companies, investments are being made consistently every year. So that is also on track. As far as the investment side is concerned, it's not a challenge. The PLI scheme is production-linked incentive. So the ethos of PLI is not fixed capital growth, etc., which has been the traditional, policy-making strategy. It is on how much you produce, what is your incremental production, and please remember, these are targets on top of very heavy tailwinds, because as Hariomji said, we had already achieved our domestic market manufacturing. So for example, if somebody was producing 45,000 crores, the targets for last year, this year are on top of that. These are incremental targets. So what Lava, for example, was producing in the year 2019, these targets are on top of them. So this is a stiff scheme, and I think it's in the interest of the nation, and the scheme has taken off. We are extremely happy about it. Of course, you see, Rome was not built in a day, so there are many other elements in this industry which have to be taken care of. Value addition is another fantastic thing which is happening. Supply chain is taking off. We are
Okay.
You would have heard the employment addition in Hosur by one of the Apple suppliers. It's a great achievement.
Yes. Yeah.
Yes, please. Yeah.
No, I understand, and which is why the PLI scheme is for a duration of 5 to 6 years, depending on which sector you belong to. And for the mobile phone manufacturing scheme, it is now a 6-year period because an extension was granted. Mr. Rai, let me end by asking you, you believe that this is going to be a better year for you. Can you leave me with numbers? You said you've seen a 60% growth year on year, or was that quarter on quarter? Given the demand situation, especially with the demand flagging at this point in time, given the global economic scenario, how concerned would you be about demand, and what does that then mean in terms of production?
No, I think it'll be not possible for me to share the future numbers, but what we have already done. So I think as far as the last quarter was concerned, as the last half year, we were 60% up, in this half year. And, going forward, of course, demand is an issue. But since we are, we are just the beginners, I would say. And in terms of Indian companies, because we were the highest in terms of target, already we were doing the highest number amongst all the Indian companies. And therefore, we have we had the highest target amongst all the Indian companies. So the next 3 months or next 2 months, how they're going to shape up, I think I would not like to comment on that, because we are working on that and we believe that we are going to do well. General business is down, yeah.
Right, demand is down at this point in time, but the hope is that things will pick up. Hari Om Rai and Pankaj Mahendru, thanks very much for joining us to take us through a status check of the PLI scheme for mobile phone makers. Appreciate your time. We will take a break here on Business 360. Don't go anywhere. We're back in a minute with more.